During days like this, it's fun to be in crypto. Everything is going up, but of course some tokens are up more than others. Pengu is one of the top performers. Let's have a look at how much longer this rally can last. Let's see how much longer Pudgy penguins can outperform. Let's have a look at the data most people are not considering. Now today we are up roughly 20%. And this channel is covering Pudgy penguins quite regularly over here. We're looking at on-chain data. We're trying to find out who's buying and selling. Now the very first video on Pudgy penguins, published 144 days ago, outperformed the average video by quite a bit. So that's the video performance in blue and the average performance is in gray. The recent video though, published 1 week ago, just performed like the average video. What exactly is going on? Is interest long-term in Pudgy penguins actually declining? Maybe the answer is that despite this 257% rally this month, too many people got burnt upon launch. Because it seemed, at least at the beginning, that Pudgy penguins or the Pengu token was a money grab orchestrated by the centralized exchanges. Because contrary to other meme coins, this was not a token that was fairly launched on a platform like Pump.fun. Pudgy penguins came out of nowhere and was listed on all kinds of centralized exchanges from day one. And here's something else that is very uncommon for a meme coin. The token has a vesting schedule. The insiders, the company, gets tokens over time. But apparently the supply does not increase until the beginning of next year. So why did then the price already go down? One explanation could be over-the-counter deals or OTC dealings. We have seen something very similar happening with Mantra DAO or the OM token. So if insiders want to get out before any vesting unlocks, they can sell their tokens for a discount to people that are willing to take on the price risk. And so let's try to figure out what's actually currently moving the price. Why is Pudgy penguins going up that much? Who is buying here? Who's selling here? Is this a lot of retail investors that suddenly get interested in the token yet again? When we look at the trending tokens on Solana, ordered by their liquidity pool size, we don't find Pudgy penguins for quite a while. The token is at number 63 in terms of its activity. The largest liquidity pool that has $4.7 million worth of Pengu tokens only saw 664 wallets interacting with the token in the last 24 hours. The volume was less than 10 million, and then compare this with the centralized exchanges. On Binance, the spot volume in the last 24 hours was 109 million. So more than 11 times of what happened on the Solana chain. And on top of that, we've also got the bets on the price, right? The perpetual futures. So there are contracts, derivative contracts, where you can bet on the price with leverage. And that's usually used for short-term speculation, not for long-term investing. And when we look at the trading volume on the perpetual futures market, here the trading volume in the last 24 hours was almost 400 million. So the price discovery really doesn't happen on the spot market. It all happens on the perpetual futures market. This is where everything is decided. And so then it's no surprise that there is strong correlation between the open interest on the asset and the spot price. So open interest is here, this green area, and the spot price is in yellow. And the two lines move in the same direction at the same time, again, because the bets on the price have an influence on spot as well through hedging activities, through arbitrage bots. But in what direction is the perpetual futures market betting? It used to be very skeptical about this rally in Pengu. So the shorts had very high financing costs. So those financing costs are every 8 hours. When we've got minus 0.6% every 8 hours, that annualizes to roughly 60% per annum. So that's how much the shorts were willing to pay the longs in order to bet on falling prices. And when that happens, a short squeeze is very likely. Now, what's a short squeeze? It means that people, or in this case, likely the market makers, buy up the token. They push up the price in order to liquidate the shorts, in order to get the liquidation fees. So this is how it works. The centralized exchanges own a lot of the token. They've got an influence on the price if it goes up or down. At the same time, they offer bets on the price. So imagine you were a sports betting house, you offer bets on the soccer match, but at the same time you also bought the referee. You've got impact on that soccer match. This is how centralized exchanges make money with tokens like this. And so that's why it's so useful to look at the funding rates. Whenever they are heavily negative, the price is likely going to go up rather sooner than later. But now we are balanced again. So the squeeze is over, the Pengu token has appreciated. Now there is a market equilibrium again. And so interestingly enough, even though Pudgy Penguins is one of the top performers, it doesn't reflect on the blockchain on Solana directly. The number of first-time traders versus recurring traders is not necessarily rising, so that's the last month. While at the same time, the price went up by more than 250%. We also don't see how the trading volume is anywhere near the early days. So again, the centralized exchanges made a lot of buzz around the token upon launch. They cashed out, then the token became pretty much dead. And now it's becoming active again. We also don't see how the trading volume on the Solana chain gets dominated by a particular wallet cohort. It's all kinds of wallet sizes that trade the token over time. We also don't see any accumulation, neither by retail nor by the whales. So on the left side, we see the number of wallets that have at least 70,000 Pengu tokens. So at the current price, that's roughly $1,000 worth of the token. In the middle, we go at 10x from that, so that's now 700,000 tokens, or $10,000. On the right, another 10x, so that's $100,000. Again, in the last month, the number of holders on chain for any of those wallet cohorts has not changed, while the price went bonkers. And again, that's because of the derivatives market. It's not because people are now accumulating the token, because hundreds of thousands of new investors get excited about Pudgy Penguins. It was market manipulation by the centralized exchanges, and that manipulation, that short squeeze, has now stopped. And if you turn very negative on the open interest funding rate again, it's probably time to buy once more. Now, in October of 2023, the market flipped. The market turned from bear to bull. The market saw inflows from traditional finance. And we can see this in this chart. This is the stablecoin market cap. So it shows how many dollars in the fiat system are deposited somewhere with a custodian, say with Tether or with Circle, and what equivalent has been minted as stablecoins on chain. And from May of 2022 to October of 2023, we actually saw a contraction of the market. So money was flowing out of crypto. People were turning back to TradFi. People were withdrawing their money. But that then changed in October of 2023. Since then, we see more people depositing than withdrawing from the crypto ecosystem. And surprise, surprise, this is of course also an impact on crypto prices. When money is flowing in, crypto prices tend to go up. And that is what we see with this chart at the bottom. This is the Bitcoin price. So when money comes into the market, Bitcoin goes up, and that is with a leverage effect. So Bitcoin appreciated by 260% since the beginning of October, while the stablecoin market cap went up by only 85%. Now still, there is a lot of volatility. What causes a price drop like this of 26% while there's actually money flowing into the system? The answer is swapping activity. So it's not just people depositing their money into the system and then wait and invest for the long term. Most people in crypto trade actively. And whenever people move from stablecoins to risk on assets like Bitcoin or altcoins, the prices go up and vice versa. So there's money flowing in and out, and there is swapping activity, people getting risk on and risk off. Now we can use that data because we can have a look at how much of the entire cryptocurrency market cap is currently in stablecoins. When most people have swapped into stablecoins, the stablecoin dominance, so the percent of all of crypto that's in stablecoins, that's pretty high. When a lot of people have deployed their stablecoins, then the stablecoin dominance is low and the crypto prices are high. So check this out. This is the stablecoin dominance, and this is much more volatile than the stablecoin market cap. And at the peak, 19% of all of cryptocurrency's market cap was just stablecoins. So that's when people are very much risk off. And that's then also when the Bitcoin price tends to be low. As stablecoins get deployed into risk-on assets again, the Bitcoin price tends to go up. Now, in the last 1.5 years, we tended to trade in a range. So that's between 9% stablecoin dominance to 5% stablecoin dominance. And if this is now coming back down again, as we have seen in the last few days, then crypto prices will go up. Let's work with the assumption that we see the exact same development of people deploying their stablecoins again as we saw in November of 2024. So let's overlay this. If we take this time frame and we look at the Bitcoin price development during that time, then we can overlay this to the price today, and we're getting to a potential upside of somewhere between $130 to maybe even $150,000 per BTC. And so this is, I think, the most likely scenario. I think most people have this backwards. There are too many comparisons made with traditional finance and the crypto ecosystem, as in when the money supply is going up or when the Federal Reserve is lowering interest rates, that's when money is loose and that's when crypto prices should go up. But I don't think the link is that strong. I think the link is much stronger for how much money is currently on the sidelines already within crypto. We know that the crypto ecosystem as a whole is expanding, right? The stablecoin market cap is going up, and that obviously matters. And at the same time, we also see that a lot of that stablecoin money is not yet deployed, but is ready to get deployed. And so if we work with that scenario, if we say, okay, a lot of that money might get deployed if times get a bit brighter, should we just go now and buy all kinds of random altcoins? I am not so sure, because here's the counter story to all of this. The Bitcoin dominance continues to go up. So as a fraction of all of crypto, Bitcoin becomes more and more important. Bitcoin tends to outperform most other assets. And we only saw an altcoin rally when Bitcoin dominance was close to 70%. So when only 30% of the cryptocurrency market cap was in the alts, that's when the alts were cheap enough to subsequently make a rally. And we are not yet there. So just building a portfolio of altcoins is probably not going to cut it just yet. Here is what I'm doing instead. I'm looking at what are other influencers and other heavyweights buying. So we track various important wallets and we see, for example, how the Memecoin team or the base AI team is accumulating the KEK token. And that's happening at a very small market cap, only 3.2 million. We got notifications for all of those purchases, and though the price just continues rising, we still need an edge in this market. We can't just buy any random altcoin, but the market is expanding. It does make sense to take some risk on bets now. Now, since crypto cannot create money out of thin air, it's still a player versus player game. And so if you follow the insiders, if you follow the people that traded well in the past, we have an edge. For example, over here, we've got 33 wallets that we track by the Crypto Banter group. They've got 1.16 million subscribers on YouTube. Or we are tracking 12 wallets by Alex Becker. He's got 1.6 million subscribers. Or check this out, Brian Young. We have 5 of his wallets and he's got 2 million subscribers. So there are two components to this. First, those influencers tend to get information relatively fast. They tend to beat the market. But secondly, they might also have an impact on the market. So when somebody with 2 million subscribers talks about a small cap cryptocurrency, of course, some of the followers will buy the token, which then pushes up the price. And so with all of those wallets that we are tracking, we get various signals. Who's buying and selling what at what point in time. And while it's nice that the market is expanding, it's still a winner takes most market. So returns are very much concentrated in just a few assets. There are mostly losers in this market and a few winners that take it all. Just have a look at the top 100 cryptocurrencies in the last year, right? There are some tokens that perform phenomenally and a lot of them that are just losing. So just diversifying does make sense. If we just build a portfolio of many different altcoins and we don't trade actively, then we are underperforming Bitcoin because Bitcoin dominance continues to rise. Instead, what we need to do is we need to find ways to buy things such as virtual very early. And this is where we come back to Brian Young. We got a signal of Brian Young buying into the virtual token, and that was at 7 cents. So that was on the 21st of March of last year. Our community got excited and bought in. And of course, the rest is history, right? Now we are at $1.75. And so this is my strategy in this market. The market is expanding, people are making profit, but still returns are concentrated in a few winners. And we have to have a way to identify those winners. And we don't have to be the best at this, right? We just need to know who are the best, and we have to find their wallets. And of course, this is not public information. And so we have to do on-chain analytics to find the wallets. And so of course there is the influencer trade channel with all of those signals, but there's also a tutorial course on how to find different wallets. So we use related trades, we use official NFT transactions, we try to figure out ways through deposit addresses on centralized exchanges, etc. to get new wallets that we then actively track with this automated bot in the channel. And since the community is learning how to find new wallets, we also have a dedicated wallet research channel. So this is then where our 500 members look for new signs for influencer wallets. And once the moderators have confirmed those wallets, they get added to our tracking. For example, here, right, we've got Crypto Gains that suddenly out of nowhere was talking about the Champ token. And of course, we knew about this because we saw the purchase alerts before in our tracking. And so by tracking the insider wallets, we become insiders as well. Not of course in the legal sense, because all the data on the blockchain is 100% official and transparent, but we do have an edge over other market participants because most people don't go through all of that effort. And so it's not necessarily just about buying one asset and finding the winner and holding it long term like virtual. It's also about shorter term trades. And so the community, of course, shares the winning trades as well over here. Just have a look. If you add some leverage to the game, you can make quite nice gains in a short period of time as well. So feel free to check it out. It's currently $125 per month. If your crypto portfolio is not just $500, but rather 5,000, then it's probably going to worth it for you, especially in this current market. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.